Welcome to SaaS Backwards, a podcast that helps SaaS and AI CEOs and go-to-market leaders accelerate growth and enhance profitability. Our guest today is Kevin Jacobson, CEO at Foxen, a company operating in a surprisingly massive corner of the housing economy, one with more than 50 million rental units and persistent operational gaps the technology has barely touched. Hey, Kevin, welcome to the podcast.
Thanks for having me, Ken.
Yeah, it's a pleasure. I'm really excited to record your episode. But before we jump in, could you please tell us a little bit about yourself that we might not know from your LinkedIn and about your company, Foxen?
Yeah, happy to do it. So I'm CEO of Foxen. We're based here in Columbus, Ohio. We operate in the housing sector, as you said. There are 50 million units, and we primarily focus on multifamily, but we're a prop tech company. So what we're trying to do is work with owners and operators in that space to make their worlds more efficient, increase net operating income and revenue per door and metrics like that, while helping them deliver a great resident experience. Kind of a fun fact about me is I started my career in finance and then thankfully got into the company building startup ecosystem world. And now this is third company I've been fortunate enough to work at, and just seeing a lot of interesting patterns over the years in terms of how to grow these types of businesses, and learned a couple things along the way that I'm excited to share.
That's great. I think pattern recognition is one of the advantages of experience, right? You can see things happening that if it's your first go, you might not notice. So I think that makes
Definitely.
an executive more attractive, right, to the investors as time goes on. So let's dig in. So in our prep call, you noted that the US rental housing market includes this more than 50 million units, but only a fraction have this kind of technology in place. And to me, I guess it seems hard to believe that this TAM is so underserved. It seems gigantic. So I want to know, why do you think that was? And then we want to dig into a little bit about what steps you've taken to accelerate growth.
So maybe just quickly what our solutions are. We offer three solutions. Think about you're a multifamily owner operator. You owner operate for, let's say, 5,000 units across a few different states. We can do three things for you. We can make sure that all of your residents have renter's insurance and are compliant with the renter's insurance requirement in the lease at all times. And that's important to eliminate the risk of something bad happening with no insurance in place. Second thing we do is give your residents the opportunity to have their rent payments reported to credit agencies so they can build credit. Many residents don't have a trade line, as it's known, established with any credit agencies. Their financial history is missing some information. We want to solve that and make sure they get the benefit of that. And then the last thing we do is all things in pet compliance. So that's shockingly, nowadays, the majority of people nowadays have a pet who are renting. This comes with a whole host of challenges, both operational, with respect to liability. And these are, at the end of the day, it's another living, breathing thing living in the unit. So you've got a lot to deal with respect to that. And with the majority of the market having a pet, it's become a big topic and a big challenge for our customers. So we try to take care of all three of those things so our clients can get the benefit of that. With respect to the history, I think classically speaking, if you talk to someone who's worked in property management or, has kind of tracked the property technology market, they'll tell you stories about not that long ago, 15 years ago, where we're printing out leases and we're doing, we're getting in a room with stacks of leases and we're manually checking them hand by hand to see, hey, is this lease compliant with our new standards, or are we tracking the right amounts with respect to rent and other fees and that sort of stuff? So this is property management, and your real estate to some degrees is considered a technology laggard by many. So some of the things that we take for granted that we see in our day-to-day lives oftentimes haven't always made their way to the real estate or multifamily world. So, Foxen's been a part of that. Company's been around almost 10 years now. There was a moment about 8 years ago now where the founder of our company, who is a multifamily owner operator himself, had the exact scenario that I described happen to him. And a resident at one of their communities, basically, there was a scenario where there was a significant fire, and at the end of the day, there was no renter's insurance policy in place, despite the fact that the lease suggested that the resident needed to have that in place. And so that just leads down a whole slew of unfortunate situations thereafter that you really just want to avoid. And that was kind of the genesis of the company. But to deliver on this type of solution, we are leveraging a lot of the modern technology and the different solutions that are available to us that were maybe not present in the years prior. So it's kind of one of those things you look back on how we do what we do today. It really wasn't possible 10 years ago, at least in the way we're doing it now. And so I think that definitely played a part in it. There's a little bit of the industry being a technology laggard. And then I think, some of the developments, like I mentioned with respect to pets, right? Now the majority of renters have pets. That was not true 10 years ago. COVID was a big accelerator of that, amongst other things. So I think it's one of these things where you look back on the kind of a convergence of things, put us in a great position to be able to deliver value to clients. And they've rewarded us by going with our solution, and we've tried to deliver for all of them.
That's awesome. I mean, what a great opportunity. And I guess it's interesting. We spoke about pattern recognition, and one of the things that I see is a lot of what we call subject matter experts becoming software industry entrepreneurs because they recognize, a need in their own business, and they feel very confident that they can address it kind of uniquely as opposed to an outsider coming in.
Having worked in the finance world, I've worked with a lot of clients in banking, and then seen in private equity, got the opportunity to meet a lot of different entrepreneurs. And it is oftentimes exactly what you said, where someone who works in a specific area or industry or niche or whatever the case may be, they stumble upon something. You combine that with a kind of a predisposition, just like an entrepreneurial nature and just curious problem solver type of individual. And they just can't imagine leaving this unsolved. And they're like, I must get this, and then you fast forward, 5 years, 10 years, all of a sudden you've built a company out of it. So you're right. I think it's a story as old as tale as old as time. And I think it's only going to get even more so that way with the evolution of new AI tooling and different ways that people can leverage technology without having to go get a PhD in computer science. And so I think that's going to be an exciting part of the years to come.
Yeah, I agree with you. We have some of our clients coding applications, coding AI agents. It's a fascinating time for sure. Hey, I want to turn our attention a little bit to the steps that you've taken since you joined the company to kind of ignite growth. So I'm wondering, what does it take to take a company that is operating well enough, but to make it really a growth story? So what are the things that you did since you've been there, and how long again have you been at Foxen?
So company's been around just under 8 years. I've been with the company almost 4 years. So I came in a little bit past halfway through. That was, if you think about 3, 4 years in, we went from the founding of the company, which meant there was really only one client at the time. It was the original company that was kind of founded within. And then you fast forward 3, 4 years, when I joined, we've got a number of clients, of which the founding companies just really figured out who are we selling to, what are we selling, how to put together the solution that you have to keep building on top of the solution to make sure that it's actually delivering the right value. There's all sorts of, you get into these things and you realize, oh, this client would prefer it this way, this client would prefer it that way. How can we build something configurable that satisfies both their needs? And those types of things are always part of the building process. So a lot of that had been done. The company realized, hey, we're onto something here. And how can we grow this? Raised some outside capital, and we can talk more about that. And then started a new chapter of really growing and scaling the organization at a pace that was not the way that the company had scaled previously. We had capital, we had a desire to grow and scale, really realized we were onto something and wanted to get it out in the market. So I think there's two key buckets of activities. One is really professionalizing the organization. And what I mean by that is just creating a scenario where within every department, you can have an expectation of consistency. So, within finance, we're going to produce financial statements on a consistent basis to allow us to learn more about what's going on with the business financially and make sure we're asking the right questions from an analysis perspective about what's going well, what's not going well, where can we do better, that type of stuff. Certainly in customer support, we want every client of ours, when they engage in an experience, to interact with our support. And there's multiple layers to that. In the case of our clients, we interact with residents, we interact with property staff, we interact with leaders at management companies. So we have different folks we interact with at any time. We want to deliver a consistently excellent customer experience. And as are easy words to say, it's hard to do. So you have to ask yourself, how do we do that consistently? Technology. We want the technology to work as intended every single time. In our case, we're interacting with property management systems. There's the core system that's really used to manage these real estate assets, as well as the resident experience in many cases. And so we're interacting with those systems. We need our APIs to work consistently. We don't want to have an issue where we thought we were going to do something and it didn't work. So, when a company goes from zero to something, all of that work is not done yet, right? You have to build your way there. So I just would say the one bucket that I think people, and why I want to start there, is people often lose sight of it, is if you're a growth company, or if you aspire to be a growth company, you still have to get the basics right, because that's what got you there. And, your next client that you want to win, your current clients don't really care. They're like, that's great. I would love it if you guys keep growing and investing in the business and all that. But I signed up to get a great solution for me delivered right now. So I'm most concerned about that. I'd love it if you guys could keep growing too. So I think it's important. And I always tell this when we're talking to prospective clients, it's like, we have a commitment to ourselves and to our, organization. You got to be clear about what got you here. And what got you here was delivering a great solution that provides real value, consistent customer experience, consistent technology, all the other areas. So I think that's, at a certain point in the company, when you're past the kind of founding insight, there's capital and so forth, you have to get to that point where you're delivering consistency. The second part of it is more directly to your question. It starts to ask yourself, how do you scale what we're doing? For me, it's really just like, we try to go really back to the basics. If you look at our clients that we got traction with and you look at the market as a whole, it's just a simple question. Where should we be focusing our time and attention? Who are the most likely clients to work with us that could get the most value, who we could reach efficiently, those types of things. And then the question just becomes, how do we reach them? From our business, we have a direct sales model. We're at industry conferences. We ask for customer referrals. We work with insurance brokers that are having a conversation, whereas we're talking about renters insurance compliance inside the unit. The insurance brokers are talking about the commercial policies associated with these apartment buildings and even the businesses themselves. So it's actually a complementary conversation. So that's another channel that we work with. But again, back to basics. Who could get value from our solution? Who can we attract efficiently and acquire as a customer efficiently? And then where are they and how do we get in touch with them and let them know that we exist? And you go from there. And of course, we've grown the sales team. We've invested more in marketing. The dollar investments can go up over time too. But I think variations of staying focused on those basics has been, to me, where, and just consistently focusing on that every day, that's what compounds. And then, by the way, it feels nice when you build on top of a solid foundation like that, because you might have a great growth year. You win one client, you kind of got lucky and it was a big client and it puts a big growth number on your year, but you got lucky, so I think you want to build something more durable than that in both of these areas.
Makes a lot of sense. You mentioned that you raised capital, and that's
Yeah.
a pretty kind of a watershed moment in a young company. So you actually started the investment that you were making, the investments you were making, kind of led to a situation where you were negative, right, on your
Yeah.
EBITDA. So I'm curious, like, what that was like within the organization. Was the founding team, the founder, comfortable with the idea that they were going to raise dough and then spend more than they were taking in? Did you obviously had the experience as an investor, seeing how that could play out positively? So I'm sort of wondering how did you make the investment scenario make sense to, I guess, your board, really?
Yeah. So it was kind of coincidental. I came on after that decision had already been made, but I would say the pattern associated with it is very similar. I think it's a very healthy pattern. A lot of times that situation we described, someone has a founding insight that, it becomes the genesis of a company. Well, technology markets in general are where you see a lot of this. I'm raising capital and I'm going to go negative and go unprofitable for a period of time. Or these days with AI, it's like I'm going to spend a ton of capex on building an AI data center, and you see these crazy numbers, right? So a lot of that pattern exists really in the technology markets in a way that it doesn't in the rest of the economy. When you start a restaurant, you're not thinking, oh, I'm going to go negative for a couple of years. A lot of that has to do with the development of technology, and building large software systems or certainly data centers and things like that just requires a significant amount of capital to get it to the point that it's really adding significant value. And so there's just a kind of a necessary investment required. Well, in our case, similar to what you were kind of getting at, is that was not the background of the company. And that's certainly not the background in property management or in real estate. We're not going negative for periods of time. So I give tons of credit to our founder, who realized, hey, we've built something here, but we're just getting started and we're onto something and it's really working. How can we accelerate that? How can we make the solution even better? How can we become a market leader? What other solutions can we add that would create value for clients? So it kind of came to that realization on its own, and then explored what opportunities existed, and there found an opportunity with our current investors that was attractive for everybody. It has to be a deal. In these situations, you're offering someone the ability to own some of your company. And so you got to make sure you know who you're working with here, and everyone has to feel good about the terms of that transaction. So we were fortunate to find two great investors in Summit Partners and Level Equity. And coincidentally, I used to work at Summit Partners, which is a coincidence. It's not it wasn't related. So we can get into that, whatever you like. But yeah, so they decided to raise capital, was able to get a deal done with some great partners at terms that work for everybody. And then we were off and running. We made those investments. We grew the team. We won clients. We built our technology stack. We invested in the customer experience in many different ways. And so to do that, you can't, we decided we are going to do that ahead of the revenue payoff for a period of time. And that's always the case when you do these types of investment rounds. You have to, that's the whole point. Otherwise, you wouldn't need the capital if you weren't going to do that. And so thankfully, it worked out exactly as we drew it up. We had substantial growth over the years that I've been here, and I played a part in that, but so have so many other people. We've built our technology, we've invested in customer experience, we've grown the team with some great people, and now we're back to profitable at a much larger scale and feel like we've added our third solution that was not present when this occurred. We've grown our second solution. So yeah, it's really off and running and entering like a newer chapter. That's really exciting.
It is exciting and good to see a success like that. I'm wondering if we drill into just go to market for a moment, what was,
Yeah.
like early changes to your go to market? You hinted at you now have investors with expectations that were
Yeah.
different than what preceded it. So how did you build your go to market to start climbing, if not getting to the hockey stick kind of curve, to get the revenues growing soon after the investment? Because I think that's sort of a gut check time.
Yeah, absolutely. So I think it was a combination of things. So, like I said, we grew the team. We had a small number of salespeople representing us out to the external world. And in our case, not every company does direct sales like I'm referring to here, but in our case, it really does make sense. The multifamily real estate world is a pretty networked and small world. If you think about it, like if someone does a development project, they're building something from the ground up, then they need equity for that. So they're getting investors. Then those investors need someone to operate the assets. So they're hiring a property management company, or maybe it's a vertically integrated owner operator scenario. There's all sorts of different models. But then you have assets in one location and another, and that operator doesn't serve both those locations. So you work with a different one. And then eventually you're going to sell that asset. You're going to sell it to another investor who's working with a different operator. So it's like if you're in the business for periods of years, 10, 15, 20 years, you're going to be highly networked. And that's one of the things that makes the direct sales model really work well for us. One of the keys was just scaling our sales presence. We hired people in specific markets that had some experience in prop tech or property management, or had kind of a foot in the door on that of experience in our market, which we think was really helpful, and just really expanded that. So that was something we couldn't have done had we not taken the investment, right? So we expanded our sales presence. I would say we also expanded our presence at conferences. So our industry has a big conference circuit, and being there and having good conversations with prospective clients who are exploring how can our prospective clients, when they go to these conferences, they're thinking, who can I meet and what ideas do I not know about that other people are using to run better communities, to increase NOI, to increase the efficiency of our property staff, deliver a great resident experience, those types of things. So we increased our presence there. I would say, a lot of people don't think about, or some people think about customer experience and customer success as a department, as a part of go-to-market, classic go-to-market, and some people don't. But I would say we felt that our investments in the customer experience was a big differentiator for us. If you look back over the last several years, in the sense that we did what we wanted to do. We started to deliver very consistent client experiences and good client experiences. About 25% of our business comes from customer referrals right now, who they're, again, back to the network industry. If someone's working for you and you got friends all over the place, you're going to tell them about it, right? So that's working well for us. And then I would say I mentioned our relationships are working with insurance brokers. We put a little more direct emphasis on that. It kind of came naturally. I mentioned that conversation where we're talking about risk inside the unit. A broker's talking about risk of the entire building or the commercial policies of the company. We stumbled into that insight, and then we thought, how can we invest more directly in this area? So those were some of the things that we did, but it was all from the standpoint of what's working, where are we seeing traction, what is a proper way to incrementally invest in those areas and scale those areas to create more opportunities for us.
I think it has to be kind of highlighted here that the go to market, especially leaning on a bag carrying sales force, it's a little unusual for people. Like the reflex for most go to market leaders is, what's my electronic footprint? And in this case, it's a shoe leather footprint right? That's what we're leading
Yeah,
with.
that's right.
I think it makes a lot of sense for these, I don't want to, it's not pejorative in my mind, but it's sort of an old school business.
Yeah.
You have a lot of individuals, right? You have families that own these properties. I mean, obviously there are publicly held, multifamily operators as well, but this is a business that, was kind of built on the work of family dynasties, right? So
Absolutely. And you definitely notice that you get into these, regional and like super regional areas where it's like you hear the story and they're like, well, it started with that we bought this building, in 82. And then, you fast forward and now it's just this, we got this 5 state presence of all these assets and we own some of them, we operate some of them. You hear it all the time. It's very similar to what you just said. And I would venture to say different, I think in a positive way. It's a very cool story. It's kind of the classic American dream in some respects, but it's not necessarily like that in every single market, and definitely in this one.
clearly not, but I just think as if you're a new CEO coming into leadership at a software company, you have to really think, what is your footprint? What's the
Yeah.
most efficient way to reach the kind of people most likely to buy from you? Certainly, I'm in the business of doing electronic marketing, but also
Yeah.
marketing strategy. So it's learning for me as well.
You're right. It's not, we actually did expend quite a bit of energy thinking about our digital footprint, how we get in touch, our presence on LinkedIn, what our website looks like, how we're funneling people there, what's the flow. But I would say in terms of kind of orienting around importance and what has driven results, I kind of started, where I started, like you said, the shoe leather footprint. So that really made a difference.
That's very cool. I want to move on. I want to sort of build on there was a little serendipity about you finding this company. You mentioned that you had worked at one of the companies that ended up ultimately investing. Can you give us just a couple of minutes about this kind of unusual path to becoming the CEO here at Foxen?
It kind of started during COVID. I was working at a high growth software company in Chicago, and that company went necessarily at that time. We hired 100 people in 30 states, and everyone went remote. Fast forward, we also raised a large Series C financing round, and things were going well. Company was entering a new chapter. And in parallel, we were one of the folks who moved locations at that time, and I moved back to Ohio. We're based in Columbus here. I just kind of decided that for me personally, living life on Zoom, managing large teams was not my favorite experience. So, tried it out for about 18 months or so during the COVID times. And I just found it was not where I was doing my best work or living my best life. I know it works great for some people, and I fully supportive of that. For me, it wasn't going great. So I started to look around and say, hey, what other opportunities are here? And I found looking around Columbus and then happened to come across Foxen. This was a little under 4 years ago. And it just so happened at that time that that the time period I described where they was like, hey, we're onto something, let's start scaling, was that time. And so they were looking to bring on a COO into the company. And then unbeknownst to me, the firm that I used to work at and one of my former colleagues was behind the scenes, it hadn't been announced yet, closing the financing round with Foxen. And so then eventually all the dots got connected, and it was a great opportunity to, I was looking at different opportunities and trying to find the one that I felt was best. And in this case, the ability for my former investment firm I worked at, Summit Partners, to be a part of the Foxen story, to me, it created a lot of confidence because I know that Summit's a great partner and that they do their diligence about companies. So whatever questions I hadn't asked, they probably did ask, and that was helpful. And then, I had a great relationship with the founder, and we ended up coming up with a game plan around working on a CEO transition over a period of years. Or, I had the opportunity to really get to know the business and get to know the industry. And we did a lot of the building together. And so it's been a great relationship and a great experience. But it's like one of these things where you couldn't draw it up. And if you looked at the track record of firms investing in Columbus, there's certainly not as high as Chicago or the Bay Area or other places like that. So like the probabilities of all this coming together was pretty slim, but I'm grateful that it did.
Yeah, I mean, I think it's amazing. I look at the research. I don't know if you follow Kyle Poyar.
Yes. Yeah. He's great.
Brilliant guy, right? He had a recent
Yes.
post on his Substack about the odds of making it as a startup software
Yes.
company. Pretty terrifying. I guess I would call it
If
somewhere
you,
between discouraging and terrifying.
yeah, I agree. The numbers are pretty stark. And so, yeah, when you start to think about being able to build a company of that, much less the probability of all these kind of relationship things and opportunities coming together, it's like kind of daunting.
I think one of the secret sauce things here, though, is relationships. Sounds like, you're a guy who
Yeah.
keeps his relationships strong, when you move from one thing to another. And I've met my share of hard driving, GTM leaders and CEOs who I don't think have a lot of good relationships in their wake.
Yeah.
So that might be a little bit of a secret sauce for people, especially earlier in your career. If you're listening, you never know when somebody you worked with is going to be the person you need, and they need you too.
I couldn't agree more. And I think this experience is one of the full circle experiences for me that has definitely highlighted that. I did always take the approach of there's absolutely no reason to burn a bridge. And that was always my mindset. So, even when there was times where I was leaving companies in scenarios where they would have preferred that I stay, and our interests are not aligned in that situation. So how do you navigate that? And I think, as an example, you have to do it very graciously and, trying to find opportunities to add value, even though you're going in a different direction. And if you're feeling frustrated about something, the Abraham Lincoln thing, and just write the letter and put it in the drawer and see if you feel that way in a week, I think is great advice. I did hear this from someone in my past. Why can't the goal be to be 100% referenceable? What if I told you you could just pick up the phone and call anyone I worked with? We might have had different experiences together that are of varying degrees of relevance. But if they can all say, hey, this is a great person, is a hardworking person, they're going to, they have great skills in this area, whatever, as opposed to, well, it was good for a while and then it kind of got bad. And it's just like, why not be 100% referenceable? I think you can actually do that even when, if a situation goes poorly and you need to be kind of forthright about your frustration or something, or, you have to address it head on, you can still do that and have that person leave the situation feeling like they respect you, not like they're going to now a negative reference for you. So, or maybe the good question is, how can I do that in this situation? Right. And ask yourself that. So I would agree completely. I've gotten paid off from that mindset, and it wasn't always easy. There was moments where I could have just done the thing that felt a lot easier, but I didn't. And I have come to value that I did that.
Yeah, I agree. I want to kind of build on that in a new direction and talk about the relationship, you know, between the investor and the operator. And, you've worked in both the growth equity side and now an
Yep.
operator. And can you talk a little bit about what a healthy relationship looks like between operators, investors, and operating partners? And, how do those relationships work best? And, are there things to watch out for?
Absolutely. And because I would say my experience working, so I worked in investment banking, I got to see a lot of clients and situations with management teams and investors. And then I worked on the investing side for a time. And then I've had three companies with three different boards and three different investors and situations. So I've kind of been a student of observing what I think really works well, and I have a couple things in mind. So first is, even though I have a background in finance, one thing I think is really important is that's not my job here. It's just job clarity, right? A professional investor, an investor, and a board member, that is a certain job. My job is that's not my job. My job is to operate and run the company and deliver great results, build a great team, all those types of things. So it's like, I think starting there, just saying, hey, we both have a job to do. Neither one's better or worse, but we have to have a mutual respect for what your job to do is. If you're an investor, you're representing your LPs. You have a fiduciary responsibility to do the right thing for them, and you're at the end of the day, you're in the job of delivering an investment return. And my job, I want to know that, I want to understand that, I want to treat that with the respect it deserves, and try to communicate that to those at the company who need to know and really understand what's going on there. And then in the case of running the company, I want our investors and our board members to have, a healthy appreciation for what that entails and the difficulties there and the things that are great about that and the things that are challenging. And I think that's starting there is such a great place, because then there's this healthy respect and appreciation for everyone's jobs, and no one's trying to do each other's jobs, right? So that's always tricky. Whether it's an investor relationship or not, when you have two people trying to do the same job, that's when it kind of gets tricky. The other thing that I think has been helpful is, if you think about what does an investor or board bring to the table? Well, where you might be deep in your company, they have breadth. Part of my experience in working on the investing side is I saw hundreds of companies a year, and just you're pretty quickly, you can only go so deep, right? But you can see the pattern. You start to see the patterns. You're like, hey, this is what top growth is looking like, and these are what some of the things that these companies are doing, and these are how first time founders, first time CEOs, whoever they're tripping up on accident, right? This is some of the things we've seen over the years, pattern recognition, that sort of stuff. And so these companies that are in that world can be a great source of information, nuggets of wisdom, pattern recognition, and things like that. But what it requires for you to mine those nuggets, what you got to do is have an openness to want to learn what they are and say, hey, here's something I'm wrestling with. I don't feel great about it. What do you think? And then what I find is in those situations, they can really bring that breath to be a source of value for you. It's oftentimes very difficult to give in that situation for them to give prescriptive advice for your specific situation. What they can do is give you some patterns, some frameworks, some things, some broader information that you can then say, okay, how does this apply to my situation and what can I do with this? And oftentimes that leads to a very productive discussion. And the last thing I would say is like many cases, firms these days, it's very popular to have operating partners and folks like that. I think it's silly not to leverage that, you know. In any cases, it's sometimes they have generalist approaches, sometimes it's specialists. It's like, hey, if you need to market help, go to this person. You need people help, go to this person. In that scenario, I think picking your spots, be proactive about something. Again, these are folks that can give you broad perspectives, seen tons of companies, they work with them quickly, and then you can apply that to your situation. So I think if alternatively, if you're just showing up to the board meetings and doing the presentation and you're see you next quarter, I think you're missing out on it.
I think in a world where everybody's money and terms are the same, right?
Yes.
What differentiates one investor from another? It's going to be either their ability to open doors for you, like they're entrenched in your industry, or they have a bench of operating experts who can augment your talent base, especially if you're a younger company. That's a really great place to land our episode. Hey, Kevin, I want to thank you so much for joining us on SaaS Backwards. If people want to reach out to you and learn more about Foxen, how can they do that?
The best place to do it is LinkedIn. I'm pretty active on LinkedIn, and we try to be out there talking about what we're doing at Fox, and I try to talk about some of the things that are going on at Fox and in my world in general as well. So would love to hear from you.
Awesome. And the website address for the company?
www.foxen.com.
If people want to reach me, I'm on LinkedIn/in/Ken Lempit. My demand generation and advertising agency for software companies is Austin Lawrence Group. We're at austinlawrence.com. That's Lawrence with a W. And if Kevin Jacobson hasn't convinced you to subscribe to SaaS Backwards, I don't know who will. Thank you so much for being here, Kevin.
Thanks for the time, Ken. Great to talk to you.